There are three things the IRS can quietly do to the money sitting in your bank account right now. And it is counting on one thing above all else, that you will go your whole life never learning that any of them exist. It does not send a letter to explain them. Your bank will never warn you, and two of the three can happen without a single judge ever signing off on it. One of these rules decides how much tax you owe on money you already earned. One of them can turn an ordinary honest deposit into a federal investigation. And the last one, the one I truly want you to stay for, can freeze every single dollar in your account in one quiet afternoon before you even know it is happening. Here is the part that catches good, honest people. Not one of these three rules is a trap because it is complicated. Each one is simple. What destroys careful retirees is the one small mistake they make the moment they find out the rule exists, because they react out of fear instead of knowledge. So stay with me, because I am going to walk you through all three in plain language. Exactly what each rule is, who it touches, and the quiet mistake that turns a harmless rule into a disaster. By the end, you will understand your own bank account better than most people ever will. Let me start with the first rule because it is the one that touches every single person watching, and it has quietly gotten more expensive in the last 2 years. It is this: every dollar of interest your bank pays you is reported straight to the IRS, and every dollar of it is taxable income. For years, this barely mattered because banks paid almost nothing on your savings. But interest rates climbed, and now that ordinary savings account you keep for emergencies is actually paying you real money. For some of you, that is a few $100s a year. For others with more set aside, it is well over 1,000. And here is what most seniors do not realize. The moment your account pays you $10 or more in interest across the year, your bank sends a form to the IRS with your name on it and the exact amount you were paid. You might get a copy in the mail. The IRS always gets its copy, every time. And this is exactly where honest people get caught. They forget about that small bit of interest, or the form never arrived, or it slipped behind other mail, so they leave it off their tax return, believing it doesn't matter. But the IRS already has the number. Its computers quietly match what your bank reported against what you actually filed, automatically. And when the two do not match, a letter arrives months later asking for the tax you missed, plus interest on it, plus a penalty, all on money you barely remembered earning. Understand the rule, and it is nothing. Ignore it, and it becomes a bill. And there is a sharper edge to this first rule that almost nobody knows about. If the name or the social security number on your account does not perfectly match the government's records, or if the IRS has flagged you, the bank is required to hold back 24% of your interest and send it straight to the IRS before a single dollar of it ever reaches you. That is called backup withholding, and it happens automatically. So the first rule is simple to live with. Every dollar of interest is seen. Report all of it, even a few dollars, even when no form arrives, because they already have it in front of them. Let me make this real for a moment, because it is easy to wave off as too small to matter. Picture a woman who finally moved $30,000 of her savings into one of those higher-paying accounts, proud of herself for earning something on it at last. That account might pay her well over $1,000 in interest across the year. Every bit of that is reported, and every bit of it is taxable. And if she leaves it off her return because it felt like nothing, the letter that comes back to her will not feel like nothing. This is not a rule that punishes the wealthy. It is a rule that quietly catches the careful saver who did exactly the right thing and simply never knew the money would be counted against her. Now let me give you the second rule, the one that can quietly turn your own money into a criminal problem, and almost nobody understands how it truly works. Here it is. When you move a large amount of cash, $10,000 or more, into or out of your account in a single day, Your bank is required by law to file a report about you with a federal agency. Not because you did anything wrong. It is automatic paperwork, and for the overwhelming majority of people, it goes absolutely nowhere. The report is filed, it sits in a system, and nothing ever comes of it. But here is the trap, and it is a cruel one, so listen very closely. The moment people hear about that $10,000 line, their instinct is to duck under it. So they take out $9,000 today and another $9,000 next week, quietly congratulating themselves for being private and careful. That right there is a federal crime. It has a name. It is called structuring. Breaking up your own money into smaller pieces to avoid the report is itself against the law, even when every single dollar is yours, earned honestly and already taxed. There are people in this country who have had their entire life savings seized over this, without ever being charged with any other crime at all. So hear me plainly. If the money is yours, you never need to hide it. Move it in one honest transaction. Let the harmless report file itself, and you have nothing to fear. It is the hiding, and never the money, that the law reaches out and punishes. And now the third rule, the one I asked you to stay for, because it is the one that can empty your account before you have a chance to catch your breath. If the IRS decides that you owe it money, it does not have to take you to court. It does not have to stand before a judge and ask permission. It can simply send one piece of paper to your bank, and your bank is required to freeze your account on the spot. Every dollar locked in place. You cannot pay a bill with it. You cannot buy your groceries. You cannot even cover your rent. That frozen account is what the law calls a levy, and it is the single most powerful reach the government has into your money. But there is one mercy built into this rule, and you must know it, because it is your only window, and most people waste it. When that freeze lands on your account, the bank is required to hold your money for 21 days before it hands any of it over to the IRS. 21 days. That waiting period is not there for the bank's convenience. It is there for you. It exists to give you time to pick up the phone, call the IRS, correct a mistake if they have the wrong person or the wrong amount, or set up a payment plan and get that freeze lifted before your money is gone for good. The people who lose everything are the ones who spend those 21 days frozen in panic. You will not be one of them, because now you know exactly what that clock is counting down and exactly what to do with it. And let me tell you plainly what those 21 days are for, so you never freeze up if it ever lands on you. The very first thing you do is call the number printed on that notice, and you do it that same day, not tomorrow. You tell them you want to resolve it. If the amount is wrong, or if it is not even your debt, you say so, and you ask them what proof they need to fix it. If the debt is real, but you cannot pay all of it at once, you ask to set up a monthly payment plan, which on its own can be enough to lift the freeze. And if paying it would leave you unable to cover your basic living costs, your food, your medicine, your rent, you tell them that too, because there is a protected status for people in genuine hardship that can stop the collection altogether. The point is simple. Those 21 days are a door, and it only opens for the person who walks through it. And there is one more piece of this third rule you have to hear, because it catches even the most careful retirees completely off guard. That same power reaches past your bank account and into your Social Security check. If you owe back taxes, the IRS is allowed to take 15% of your monthly Social Security payment, month after month, until that debt is paid off. On an average check, that is a few $100s quietly disappearing every single month. Now, they must send you a notice first, and you have 30 days from that notice to arrange another way to pay before the money starts coming out. But if you set that letter aside and ignore it, the deductions simply begin on their own. So the third rule is really a warning wrapped inside a rule. The IRS has a longer arm into your money than almost anyone else alive, and your only real protection is to open every letter it sends you and act inside the window it gives you. Now, let me tie all three of these together because there is one single thread running through every one of them. None of this comes hunting for you out of the blue, and none of it is hidden the way a scam is hidden. It is simply left unexplained, sitting quietly in the rules, in the hope that you never learn it and never think to ask. Your interest is always seen, so report every dollar of it. A large deposit is completely harmless, but hiding it is a crime, so never break up your own money. And the IRS can reach your account or your Social Security check without ever seeing a judge, so you open every letter it sends and you move inside the window. Learn these three, and you stop being the person these rules were quietly written to catch. This is general information to help you understand your own accounts, and it is not legal or tax advice. If any of these three is touching you right now, one honest phone call to the IRS or to a tax professional is worth far more than staying silent and hoping it passes. And I have put the plain steps for each of these three rules, the right offices to call, and where seniors can find free tax help, all in the description just below this video, so you have them the moment you need them. And before you go, I want you to do one small thing. Think of one person you care about who keeps their savings in the bank and has never once heard a word of this. A parent still doing everything on their own, a neighbor who worries about money in silence, an old friend who would never see any of it coming. Send them this video. It costs you nothing, and it may spare them the one mistake that could cost them nearly everything. Watch your own mail, trust what you now know, and take good care of one another.